2025 is ending with major economic tremors in the U.S. Inflation pressures, trade tensions, AI risks, and markets swinging wildly. If you're investing, saving, or simply trying to protect your wealth, you need to hear this. Today, I'm breaking down the biggest business stories you must know, who could win, and who might get hurt. Let's dive in. Part 1. Global risks and inflation pressure. First, economic headwinds are stacking up. The latest warning from a major central bank official. Global economic fragmentation could push up inflation and destabilize financial conditions in the U.S. Tariffs and trade policy uncertainty remain a heavy weight on many industries, from manufacturing to retail, creating ripple effects in cost structures, supply chains, and commodity prices around the world. That means costs for businesses rise, but so do risks. For consumers, higher inflation and price instability may hit household budgets harder in 2026. For investors, it's a call to be cautious, not reckless. Part 2. Markets and rate drama. Back on Wall Street, there's renewed hope, but not without anxiety. Some major financial outfits now expect the Federal Reserve to cut interest rates soon. That announcement has already sparked rallies in tech stocks and a spike in precious metals demand. Gold and silver jumped as investors hunt for safe havens. But here's the catch. Softer rates might reignite inflation or weaken the dollar. So while some pockets of the market look set to benefit, long-term investors must plan carefully around interest rate risk and dollar instability. Part 3. Retail and consumer trends. Consumer behavior is shifting fast. During this year's holiday season, many Americans moved away from impulse buys, instead relying heavily on buy now, pay later (BNPL) services. That tells us something. Inflation and price pressure are squeezing wallets. People want flexibility. Retailers that survive 2025 likely will be those offering affordability, essential goods, or smart payment options. Big-ticket luxury purchases? Riskier bet. On the flip side, retail real estate is seeing some interesting moves. Despite all the noise about e-commerce versus bricks and mortar, some retailers are re-entering the real estate game. But only the discount chains, thrifts, and value-focused retailers seem to be expanding. For investors and business watchers, retail isn't dead. It's just being reshaped by consumer sentiment, inflation, and smarter spending. Part 4. Corporate risks and AI uncertainty. This may be the most important part. Corporate risk is rising drastically. Boards and executives now have to navigate a complex web of regulatory change, global instability, and technological disruption. The age of passive oversight is over. Take AI. More than half of U.S. business leaders say AI is now their top risk area, not just opportunity. What does that mean for investors? Companies that adopt AI recklessly, ignore governance, or underestimate legal and compliance exposure could face serious trouble, especially in finance, health, manufacturing, where data and automation are deeply embedded. If you hold stocks or invest in funds, check how companies disclose AI risk. If there's no disclosure, think twice. Part 5. What to do, strategy, and advice. So, how should you act in this volatile environment? Here are key moves. Tilt toward defensive sectors. Consumer staples, discount retailers, metals, essential services. Businesses with stable demand even in inflationary times. Diversify your holdings. Don't ride a single sector. Mix growth with value, stable yield with balanced risk. Check companies' governance and AI risk disclosures before investing. Companies embracing transparency and responsible AI are likelier to survive shocks. Consider hedges. Safe haven assets like gold or inflation-adjusted instruments, especially if inflation remains sticky. Keep an eye on policy and rate actions, central bank decisions, trade policy regulation. These will shape markets more than hype-driven narratives. This isn't a time to chase hot trends blindly. It's a time to prepare with knowledge, balance, and caution. Call to action. That wraps up our December 2025 business news update. But the story is far from over. The economy, markets, and companies are all shifting. What happens next depends on policy, global trade, and how businesses adapt to risk. If you want to stay ahead of these changes, subscribe, like, and hit the bell. Drop a comment. Which of these trends worries you the most? Inflation, AI risk? Retail collapse? I read every comment. See you in the next update.